There's lots of turmoil in the world, and people are wondering what the crap is coming next. How is this going to affect everything? How is this affecting the real estate market? How is this affecting interest rates? There's so many questions that people have right now. So we're going to break it down. What's going on with inventory in Phoenix? What's going on with interest rates, inflation, all those things. We're going to talk through it today. What's up, everybody? Welcome back to Real Talk Real Estate. I'm your host, Mark Cann, local realtor here in the Phoenix area with my home group real estate and owner of the Benchmark Real Estate team. As always, guys, this is a podcast format. I'm not editing what I say and all this stuff. I'm just here to be real with you, give you as much information as possible so that way you can make the best decision possible. So I've been gone for a little bit. I was traveling some and just had some things come up that we weren't able to get a video out last month, so apologies. But we're going to get right into it and where we always start. And we're going to talk about the market and the trends and what's going on so that way you can kind of know what to expect for the rest of the year. And again, no one has a crystal ball. We can't predict anything, but we're going to at least tell you, here's the stuff we're seeing, so that way you can know how to adjust accordingly. So as of right now, we're under 25,000 homes on the market. And here's the thing you have to understand about the Phoenix market is it ebbs and flows. The spring's really heavy, fall's heavier. Summer's a little bit lighter because it's hot. And a lot of people, may say, hey, we'll wait till a little bit later to sell. So this isn't a concern. It's not a bad thing. It's just we have less people selling their homes. Some people are pulling their homes off the market because they've been sitting for a long time and they don't want to keep doing this. So there's a lot of different factors to it. Now, everyone wants to talk about interest rates. And interest rates are a major factor. Obviously, there's so many different things happening in the world with the wars and different things, and that impacts oil, which then impacts so many other things, the 10-year treasury, and so that impacts interest rates. We're sitting, around 6.5%. We've been hovering around there. We've gone up to 6.6, 6.7. We've come back down. We've been to 6.4. We're hovering around. It's going to be moving and changing because there's a lot of uncertainty. And just remember, mortgage interest rates follow the 10-year treasury, not the Fed. Now, a lot of people have optimism because of the new Fed chair, and I always laugh because people are like, he's going to come in and just everything's going to get slashed. And it doesn't happen that fast. Sorry, it doesn't. And the Fed doesn't completely control those interest rates. And so it's going to take a longer process if they even do anything. Again, there's no promises of any of that stuff. Just a lot of people, I think, were speculating on that. So right now they've been hovering, and that slowed everybody down because when we were seeing interest rates around 6% and gained under 6%, man, we saw activity really picking up. Listings were moving. Now that we're sitting at 6.5%, and there's a lot of turmoil, I guess you could say. People are slowing down, taking their time. So days on market's just longer, and people got to get used to it because people forget, days on market, the norm was 90 to 120 days. And then from 2016 to 2022, it was just craziness. And people are expecting that, and that's not the norm. We're in kind of a normal market, so the days on market are going to be a little longer. The homes that go faster or the homes that are fully renovated, are priced well, whoa, those are nice. The homes that sit are the ones that are overpriced, or they're not renovated and they need to lower the price in order to get people to be interested at all. So the patience is the key in this market. I tell my listings that all the time. We know what the days on market are coming into this, and we need to be able to adjust and be patient. So there's that. We're going to go over Cromford data. Before I do that, I'll talk about just the inflation data. So inflation did jump up the past couple months, and I'll show it to you here so you can see it. We were at 3.3, then 3.8. Some of this, I don't know if it's a actual, I don't know what the word is I want, but is it skyrocketing like that? I think it has a lot to do with the oil stuff. And a lot of the things that are happening in the world, and I have a feeling, I've been listening to different people talk about it, and it sounds like some of this is deceiving in why that's going up. And so it'll be interesting to see once, and hopefully that war ends, in the Middle East at some point, that when oil prices come down, that maybe this levels out again. So we'll have to see how that plays a factor. And again, I'm not an economist. I'm not going to speak to it and say I'm some expert on it. But let's talk about the Cromford Report. So as you can see from the Cromford Report, and I'm pulling it up here, there's a lot of red on here you'll see. And remember, the index that they have, 90 to 110 is a balanced market. Below 90 is a buyer's market. Above 110 is a seller's market. I take it all with a grain of salt. I don't believe that all these numbers are exactly, for every house. I think, again, localities, real estate's local. It's not national. And it's really local. For instance, there are certain cities like Fountain Hill's crushing it right now. You look at some of these other cities, on the east side, Gilbert. I have a transaction in Gilbert right now, and stuff's moving. If it's nice, it's moving, man. And that's the thing is every city is going to be different. And then you get, on the lower end there, Santan, Maricopa, Queen Creek, again, the further out from Phoenix, the more they're struggling to find buyers out there. As more of a buyer's market. My rule, if it's under 100 at this point, it's probably a buyer's market. Between 100 to 120 is probably a balanced market. And then, above that, maybe 120 is too high. Maybe 110 is actually pretty good there. So it's one of those that, to me, there are markets that are moving. We are definitely seeing higher dollar amounts moving. It's so funny because you're seeing pretty much 900 to $1 million and above still moving fairly well, as long as it's priced decently. I'm seeing a lot of $1 million homes in the low millions that are overpriced and sitting. But we are seeing that range of 500,000-600,000, probably about 600,000 to 800,000 is a little stale right now. It's hard to get people because interest rates went up. So it's one of those, again, the market's going to ebb, it's going to flow. And what is important is that you find somebody that's going to help you guide through that. If you're here in Phoenix and you're like, I don't know what the crap to do, or I don't know who to talk to, I'd love to talk with you. I'd love to sit down, take you to coffee, and just hear what your goals are. I work real estate through relationships. I'm here to serve people. I'm here to do what's best for you. It's not about a transaction. It's about a relationship and doing what's best for you. So my information is right here. I'd love for you to reach out. Would love to connect with you. Guys, you've been listening to Real Talk Real Estate. I'll catch you next time.